The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Juliana Tattlebaum and Steve Sedgwick. These are your headlines. French President Emmanuel Macron tasks outgoing Prime Minister Sebastian Lecornu with finding a way forward after his shock resignation as yields spike and equities slump.
Gold notches yet more record highs as U.S. shutdown uncertainty continues, edging closer to the symbolic $4,000 level.
And AMD upping the ante, inking another multi-billion-dollar deal with ChatGPT maker OpenAI, sending shares in the chip designer more than 20% higher. Good morning, good morning. Can we just get it over and done with?
What Band-Aid are we ripping off?
No, just get gold to $4,000 and then we can say, yay, gold 4,000. Because can anyone think of any reason why the safe havens have gone exponentially higher this year? Let's have a think. We've got the world's most important economy has a fiscal problem and a shutdown. You've got devastating wars in the Middle East and in Europe as well. You've got a country which is at the core of Europe that perhaps should have had its crisis, and Charlotte's here already 15 years ago but didn't, and is actually utterly dysfunctional. And I'm not talking about Britain for a change, that too. Oh yeah, and you've got a company that's losing $10 billion a year, whose value has probably gone up to over $500 billion now, which is in some circular trade with the rest of the technology companies, which is creating a bit of a spiral that to anyone who's been in the market longer than 10 minutes feels a little bit uncomfortable. Apart from that, I can't think of any reason why gold would be at 4,000.
Well, don't forget, we've just had a lot of commentary again overnight about why prices are going to accumulate from here. This massive AI cycle that's unfolding. A lot of big hedge funds are talking about piling into the trade, and you see retail investors very much on that page as well. Nobody wants to miss out. We know there is a FOMO trade happening. The way investors have been getting around that has been to diversify. But one of the big diversifying trades yesterday, I've got to say, a few question marks. We've seen the situation in France, the political situation not just destabilizing for France, but what about the wider European trade? And the view from some in Brussels already, they're worried about Macron's lack of grip on power and whether there could be some blowback around geopolitics, including the war in Ukraine, some of the other big initiatives that Macron has had. And if you think about Europe as a diversifying trade for all those that are piled into US equities alone and US tech, I mean, that story has some question marks today. And you ask the question as to why people are buying gold. Well, it's the true diversify when everybody is going long every other asset class.
Well, speaking of gold, what's extraordinary to me looking at the trade yesterday and what we've seen over the last several months is anything that OpenAI seems to touch turns to gold. And yesterday was just a prime example.
How much money are they making?
AMD shares up 24% yesterday after announcing a deal with OpenAI.
Do you know
Figma,
Altman was
Expedia,
quoted,
TripAdvisor, all popping after simply being mentioned at the developer
do you know
day.
what Sam Altman said on Monday? You'll love this one, everyone. Chief Executive Sam Altman on Monday said, becoming profitable was not in my top 10 concerns.
Well, that's how this game works in the tech world. I think Altman also said yesterday at the developer conference that it's a strange new thing that started happening, that share prices are heavily influenced by being associated with us. We're trying to figure out how to adjust for this kind of world, but it's weird. That's what he said when he was asked about the influence that OpenAI has on other share prices.
Well, yeah, I mean, yes, they're talking about moving towards becoming an operating platform. So, I mean, that is a significant step. Let's push on and talk about France, where French President Emmanuel Macron has tasked his embattled outgoing Prime Minister Sebastian Lecornu with holding last-ditch talks with other political parties to reach an agreement on his new cabinet by Wednesday evening. This after Lecornu issued a shock resignation on Monday morning, less than a month after being appointed Prime Minister. Speaking on the steps of the Elysée, Lecornu put the blame on the country's warring political blocs.
Les partis politiques.
Political parties continue to adopt a stance as if they all had an absolute majority in the National Assembly. And in the end, I found myself in a situation where I was ready to make compromises, but each political party wants the other party to adopt its entire programme. This is true for parties sometimes from the centrist bloc, and it's also true for the opposition.
Well, Charlotte joins us with more. Charlotte, Macron seeking to find more mileage here for Lecornu, more mileage for himself as president.
Yeah, and again, a new rabbit out of the hat, surprising everybody here again, announcing these 48 hours to try and find a solution, announced by Sebastian Lecornu, the Prime Minister, who, as you were saying, just resigned just yesterday, but has 48 hours to try and find a platform for action and stability. And only on Wednesday night, then he will report to the President on whether there is a path forward or not, and then the President will draw all the necessary conclusions. It's hard to imagine what Lecornu can do in 48 hours that he hasn't done in the past 4 weeks, or that his predecessors haven't managed to do in the past several months. Try to find a compromise with different parties, but certainly, this new thing kind of creating a bit more confusion here again. Like, what's the point of all this? That happened after Bruno Le Maire actually said he was withdrawing his name from the government. And you remember he was named defense minister on Sunday night. That ruffled a few feathers, particularly amongst Les Républicains, the centre-right party. So that's how this whole conversation started. But again, we have to wait to see what happens. Certainly when they said that the president will draw all the necessary conclusions, it's a very veiled threat to a certain extent of calling a snap election and that's a threat towards Les Républicains, the socialists, because they don't particularly want a snap election, believe it or not, because looking at the polls, that wouldn't benefit them. So it's kind of put them against the wall that, this is their last chance potentially to come to a solution when it comes to the stability of the government. But as it just drags on the process to a certain extent. There's still a lot of uncertainty, and there is a question there. And from what we hear, we've seen the reaction on the market. There was a little bit of recovery on the CAC at the end of the day. But Goldman Sachs this morning already saying that they're lowering their growth forecast for next year. They're raising the deficit forecast for this year to 5.5%, and their deficit forecast for next year to 5.3%. Just a reminder that the government is targeting 4.7%, where Goldman Sachs see it at 5.3% next year. And that is the important thing in the bigger picture, is that the public finances still very much under pressure, and while the political uncertainty and the deadlock continues in Parliament, no tough decision can be taken on that front.
Charlotte, thank you for setting the scene for us. So let's continue the conversation with Eleanor Helwa, who is MP Ensemble pour la République. Thank you so much for joining us today. Do you want to just explain the political discord from your lens? Where do you think the situation goes next from here?
Thank you. Sorry, I have some trouble hearing you right now, but can you hear me well?
Sure, we can hear you. Thank you very much. And I'll just repeat the question so you can hear me. Just explain where you think the political situation is at in France and what you think the options are from here.
Well, it's fairly simple. We have a very divided National Assembly, divided to a point that we've never seen in our history. And we have political groups, political parties that are taking some time to change their mindset and going from a situation where it was all very simple, you had a majority and an opposition, to this tripartition of the National Assembly and the need to find compromise and to build together a budget, which is not the budget that they would have proposed, but the result of a compromise.
The business community has worked well with President Emmanuel Macron since he took office the first presidential election many years ago now. The Open for Business sign went up very evidently for a lot of international businesses, and that has been positive for France. The questions were growing yesterday as to whether Emmanuel Macron can now serve out his term as president. What do you think?
I believe he will. I mean, he said on several occasions that he wants to finish his term. And I think it is important not only to keep him until the end of his term, but also to ensure the stability of our institutions. I believe that because we have an unseen situation in terms of group presence at the National Assembly, this does not mean that we have to throw away the institutional system in France. What we need to do, and really this is a call that I've made for quite some time now to my colleagues, is to find a way to build this compromise. And the problem we're facing, the main problem, is that you have too many potential candidates to the 2027 presidential election, and that everyone is thinking of its own parties and of its own interest instead of thinking of this absolute need to find a stability only for a few months until we have in about 18 months a presidential election and the new legislative elections.
Well, Eleanor, as you're saying, it's still 18 months until the next presidential election, which, I guess in politics is a long time. We saw Les Républicains, you say, kind of trigger the crisis. That's what's new in this crisis. It wasn't the opposition that created the government to fall. It was the own allies of the majority, Les Républicains, that triggered that. And then we hear from Gabriel Attal, the leader of your own party, last night saying, I don't understand the president's decisions anymore. Is President Macron just losing all his allies one by one? And what does that mean then for Macron for the next 18 months?
I believe what you're seeing is the result of the past 24 hours, which is totally unexplainable. I mean, taking 3 weeks to appoint a government that is basically all of the ministers that were appointed in the previous government that was taken down by the National Assembly, plus one former minister, you don't really understand why he's named at the armies. This all is very difficult to understand. And, Sebastian Lecornu said, I will listen to the parliament. I will work with the parliament. This is a more parliamentarian moment of the Fifth Republic. Well, this is not what has happened in the past 24 hours. Because it hasn't been the case in 24 hours, it does not mean, again, their institutions are moot or that we have to change the whole system. I still believe that the best outcome, the best solution would be to have a proposal coming from the National Assembly. And I've actually talked to our president, and I think it also has to come from the Senate. We need to take the initiative. And I think this is what we're about to do. And I've heard several leaders reacting to what has happened in the past hours and going that way. So I still think there is a way, and we have to find it.
So we have until Wednesday evening to know what the president will decide and whether Sebastian Lecornu can find a path forward potentially for the government. Where should the Prime Minister come from in that case? Do you think a left-wing Prime Minister should be the option going forward, or should President Macron pick another name from his own side?
I think that's perhaps not the right question, because it's not so much who it would be, but who will pick him, who will pick the Prime Minister, and how accepted he or she is by the National Assembly. We've seen that when appointing Michel Barnier, François Bayrou, and then Sebastian Lecornu, the president, out of, as you said, his hat, was something that did not work at the National Assembly. Sebastian Lecornu had the lucidity to say, well, it has to be the parliament that decides. I think now is the time to also to consult the parliament on what we call a feuille de route, or a basic pact, so that we can have a stability that is so needed in our country for the few months that are left before the new elections that are scheduled in our political calendar. So again, I think the answer, the person, the program needs to come from the National Assembly. It's pretty obvious. It has been for some of us since day one, but it takes a bit of time learning to go from a presidential regime to a more parliamentarian one without changing the institution or having a revolution.
Who, in your opinion, is responsible for the political mess that we're in right now?
I think it's a shared responsibility. I think the snap election was not understood. It was seen as not necessary at the time. I personally was extremely surprised. But on the other hand, if you think at what had happened between 2022 and 2024, I was at the National Assembly, it was really difficult to find majorities because you already had Les Républicains being very difficult and opposing to reforms that they would normally back up, such as the pensions reform. So at some point, well, the snap elections clearly created a very, very complex situation. But since then, I think it's also been a responsibility with the opposition wanting to stay in a, closure, very opposition mood, not wanting to participate in any coalition, not wanting to take any responsibility for anything that was decided. But it was also obviously the executive responsibility for perhaps not trying harder to seat everyone at the same table and coming up with a result. So I think you can go back and find a lot of guilt, but I don't think that's really what we have to do right now. We have to reassure French people, first of all, reassure the markets, and show that we're responsible. And perhaps just to give a little note of optimism, I've worked only with groups from the opposition since I've been elected, and we're many in that case. We build compromises, we come up with bills and legislations. We do that every day. There's no way we can't do it to find a budget.
Eleanor, I hear you and I hear your pragmatism, But everything at the moment, to the outside eye, is pointing to an ultimate victory, whether it be in parliamentary elections or presidential elections for National Rally. That is what is pointing. Is this going to be the result of the failure of you and your colleagues to actually find some accord that actually the right comes in both in parliamentary and presidential elections?
What you're stating is so obvious, and yet I feel that my colleagues need to hear it over and over again. I will fight until the very last day for this not to happen, not because I will tell you that they're Nazis or that they're fascists, but because I disagree with virtually everything they stand for. And this is something that is very strong, and it's also the basis of my political engagement. And I know we're many in that case. So we have to fight against this. But it's not surprising that they're increasingly popular because they get the fear vote. And right now, everyone is preoccupied. I'm preoccupied. I would be lying if I told you I wasn't. So this is why we need to go back to a table. It might seem impossible today, but we've seen so many things happen here in France over the past 24 hours. And this is a formal call to my colleagues. We can agree to disagree. We disagree on many things, but we can agree on the essential. And the essential, we were able to make this block on the National Rally and have them not get power last time, because again, a majority of French people disagree with their vision. And this is what we also need to do now that we have a National Assembly that is what it is. Not that I like it, but this is what we have, and this is what we have to work with.
We'll have to leave it. Look, you've been very generous with your time, and we appreciate it very much indeed. And thank you very much indeed for all your commentary. Eleanor Kawa, who is an MP for Ensemble pour la République, thank you very much indeed. And Charlotte, you're working very hard at the moment. You always work hard, but you're working even harder.
Well, is that 5 prime ministers, 6 prime ministers under 2 years?
Yes, I know. I went through, I mean, like, you know, if you last 270 days these days, you've done incredibly well. It's like the old days in Great Britain.
Italy, Japan as well. They've all been through phases like this.
Remember
the Italian revolving door? We used to have this massive wall of the prime minister going, coming back, going, coming back.
I know, it's extraordinary.
Yeah.
Bon chance. For more on what could come next for France as the country faces, well, it says yet another political crisis. I'm going to argue. I think it's the same political crisis. Anyway, check out CNBC.com, or if you're in France, CNBC.com. No, it's not. Okay. Moving on. Seen this data? Oh, Germany. August industrial orders were expected to be up 1.1%. If you can read that at the bottom, it's trying my eyes as well. Negative 0.8%. So roughly 2 percentage points lower than was expected. And what's the euro doing? Absolutely zip at the moment, really. 117, give or take the change. But I want to know what's coming up on the show, Juliana Tattelbaum.
Well, the U.S. government shutdown is entering its second week after a fifth failed attempt at getting a stopgap funding bill through the Senate. Plus, AMD brings the fight to NVIDIA, upping the ante with a multi-billion-dollar partnership with ChatGPT maker OpenAI, and plenty more on France's fresh turmoil with Socialist Party MP Arthur Delaporte. That's coming up at 8:15 London time. Welcome back to the program. Let's get you a check on the latest market action. You're looking at the U.S. close yesterday. It ultimately was a mixed session. The Dow Jones slipping in yesterday's trade, breaking a 6-day win streak. As you can see, we did see more gains for the tech-heavy NASDAQ. AMD shares, the clear outperformer in the U.S. yesterday, shares surging at almost 24% on the announcement of that deal with OpenAI. We'll talk more about it in detail later in the show. As far as European markets go, here's where futures stand right now. Yesterday, we had the Stock 600 pull back ever so slightly, also breaking a 6-day win streak after last week's outperformance versus the U.S. Now, this morning, we are looking at a little bit of a bounce back in the French market after yesterday's sharp underperformance. Ultimately, the CAC 40 ended down 1.4%. We were down about 2% at one stage, so we did bounce off the lows ultimately. Now, in terms of bond markets, we're also very closely tracking the action across bonds this morning. You can see there we are looking at yields slightly higher in Germany, France, and Italy. The UK 10-year gilt trading slightly lower. Now, in particular, of course, we are watching the French bond market. After yesterday, we saw yields rise in response to the fresh political turmoil there, a crisis within a crisis. That's how Charlotte described yesterday's turn of events. Guillermo Felisa joins us now, global investment strategist at PGIM Fixed Income. Guillermo, great to have you with us. Good morning. Let me get your take on the action we've seen in French bond markets, given the story of the hour, of course, here in Europe is what's happened in France, and we're all tracking yields in the country moving higher. How would you describe what's being priced in at the moment?
Yeah, look, I mean, clearly we're seeing more stress, and that's because the political stakes are higher. But it's a movie that we've seen before. We've been in this situation at least 3 times in the last year or so. So if you look at the increase in spreads, I mean, they went from 81 to 88. It's a big increase, but it's nothing really out of the norm. In other words, the market is already pricing some stress, some fiscal concern. Another question is what happens next, and where does that settle, and looking for opportunities there.
It's interesting. It does feel like the consensus is that the move higher we've seen in French bond yields has been orderly, even though we have seen some risk being priced in now, still fairly orderly. At what level does the ECB begin to worry about the French situation?
Yeah, I think we're still a bit far from that point. As you said, the move has been orderly. 80, 90 spreads are not particularly worrisome. And the market knows that there's guardrails, right? So they are actually helping in some way to contain these spreads.
There is some fear now that the European Union's endeavours to right foot itself to try and have its own destiny in its hands could be in doubt, because you've got the second largest economy going from political crisis to political crisis. What do you make of the overall threat, given that a lot of investors have diversified to Europe in recent months?
Yeah, I would actually say the opposite. So now we think the European Union is a lot more supportive of France. So they definitely don't want something like a repeat of the European crisis in 2011-12. And now, even though France, has fiscal problems and they are not, exactly compliant with some of the excessive deficit procedures, the European Union is behind it.
But if Emmanuel Macron were not to serve out his full term as president, surely that would put in doubt some of the Macron forces at play at the European Commission. I mean, he's been driving force for a lot of European affairs and policy action, geopolitics, the war in Ukraine, Gaza. I mean, surely some of these changes too are impacted if Macron does step down.
There's definitely scenarios where things get more messy, and President Macron stepping down is clearly one of them. But we think it's still low probability. He's been quite clear that he doesn't want to step down, but it's clearly a risk scenario.
So I was doing a little bit of work, and I didn't get to Ireland, but I did the rest. So I was trying to compare how bad we are compared with the crisis. You mentioned the last year. I'm going back to 2010 because I'm a firm believer that if France had had its crisis in 2010, we wouldn't be here now. They would have reformed their economy like the Spanish, the Greeks, the Italians, and the Irish certainly. Anyway, so back in 2010, the Greek budget deficit. The French one now, we're roughly about 6%, and we're trying to get it down to 4 handle. The Greeks back in 2010 were roughly 10% budget deficit. So there's a clear line there. The French are nowhere near that. The Spanish were 9.3%. The French are nowhere near that. The Italians were, the Portuguese were 9.1%. So the Greeks, the Spanish, and the Portuguese were way higher than what we're seeing in France at the moment. So France isn't in the same kind of crisis. And then I saw the Italians who have this mammoth debt to GDP, but it's the deficit I wanted to know about as well. The Italian budget deficit in 2010, which I didn't realise, looking back, was only 4.6%. And yet they had a full-blown sovereign debt crisis. And we all remember the doom loop and all those words we came in as well. If the Italians can have a full-blown debt crisis on 4.6%, why shouldn't the French be having one at 6% plus?
Yeah. No, I think there's nuances that are very important to understand. So at that time, Italian debt, the size of the debt was huge, yes, and it was particularly sensitive to interest rates. So at that time, I think 7% was kind of the line in the sand. So markets thought if those yields go beyond 7%, it's going to be really difficult for Italy to honor their debt. In the case of France, their debt is a lot less sensitive to interest rates.
Right.
And even though the fiscal deficits are high, it wouldn't take a lot to actually take the debt to a more sustainable path.
Can I just jump in there, Guillermo? They're only talking about getting it down to 4.6, 4.7%. That was how many prime ministers ago? Beirut, 2 prime ministers ago, 3 if you include the fact that there'll be another one, we think. He was only trying to get it down to a 4 handle, which is still the same kind of level as Italians. It's still nastily high. And by the way, there happens to be a target with the ECB and European Commission, which is significantly lower than that even.
So as I said, it's a very different set of circumstances. So the other important point to realize is that in the case of France, 90% of their financing needs are covered for this year. So it's not like French debt is in this very precarious situation where things could really kind of tip over any minute. They can buy time, they have a bit of time, and they don't need to do a lot of adjustment to the fiscal deficit to try, to bring that debt to sustainable levels.
I'm sorry, Guillermo. So, I think you're an amazing expert in your field, but they don't need to do much. But they seem utterly incapable of doing even that bit.
But that is the problem. The problem is the political gridlock. So it's not really the macro, and the macro backdrop is actually not that bad. I mean, France is still growing. Close to 1%. The European Union as a whole is growing close to 1.3% or so. So it's the political inability to sort out the fiscal mess that is a problem.
Guillermo, I want to again go back to the bigger picture because the weak US dollar has been a big trade for fixed income this year. That's what supercharged a lot of fixed income. And the reality is, if we have a story like this unfolding, does it start to undermine the euro's strength? I mean, yen's strength has just been undermined by the political situation in Japan. If we start to undermine another major currency in the basket, namely the euro, where does that leave the weak US dollar trade, and does it undermine the global bond trade that we've witnessed?
Yeah, so definitely this is a speed bump for the weak dollar story, right? So when I think about the dollar, I think about interest rate differentials as a big driver, and also the risk premium on the dollar. So what we saw around April the 2nd was an adjustment in the risk premium of the dollar, which of course we never talked about because the dollar is usually thought of as a safe haven. But that's what happened back then. And of course, on the interest rate differential side, as the employment picture in the US cools down, as labor weakens, there's more chances that the Fed cuts, and that also unleashes a weaker dollar. Of course, when you have shocks like what we see in France, what we see in Japan, you have 2 sources of weakness in the euro, in the yen, and that means a stronger dollar. But that doesn't necessarily mean that the long-term trends for dollar weakness are off the table. They are still there. We're just seeing a bit of a speed bump.
Short-term challenge.
Guillermo, can we wrap up on Japan? This is where we started out the morning yesterday, and it felt like it was going to be the biggest story in the market, and it was for a little while until Lecornu handed in his resignation. But how are you thinking about the Takaichi trade here and the impact not only on Japanese bond markets, but bond markets more broadly? We had a guest yesterday saying could have some significant ripple effects for U.S. treasuries and where yields go from here.
Yeah, no, it's fascinating what happened. If anything, it was more of a surprise what happened in Japan than France. And we're seeing a bit of a repeat of the Abe trade, right? So what happened with Abenomics, which was basically an economy that was in steroids because of easy monetary policy and easy fiscal policy. Of course, the backdrop now is very different because the Japanese economy is actually improving. So there's growth and inflation is actually above the target. So now it's not obvious that those are the right policies for Japan, but clearly the market is reacting essentially as if the economy could overheat. So the yen has weakened, and you have a very steep curve with the long end selling off, and that's opening opportunities as well. The 30-year yield in Japan is now the same as in Germany, which would have been unthinkable a few months ago.